Auto parts is a category that requires a genuinely honest conversation because there are real risks here that matter, and there's also a real argument for why the wider cap rates create value for the right investor. Let me give you both sides straight. Advance Auto Parts NNN properties trade at 5.75% to 6.75% cap rates, 50 to 100 basis points wider than AutoZone and O'Reilly. That spread is a direct result of Advance Auto's S&P downgrade to BB in 2024, putting the company below investment grade. Buildings are 6,000 to 7,000 square feet on 0.75 to 1.25 acres. Entry prices run 1.5 million to 2.5 million, the lowest entry point in the auto parts NNN category. Lease terms are 15 years with renewal options. One important structural difference: most advanced auto leases are NN, double net, not absolute NNN. That means the landlord typically retains roof and structure responsibility. Here's the value argument for Advance Auto. The company is the third largest auto parts chain in America with 4,700 locations and an established brand. The category thesis: aging vehicle fleet, consumer trade down from new cars, growing DIY market, applies equally to Advance Auto as it does to AutoZone and O'Reilly. The company is executing a turnaround strategy under new management, and the wider cap rates mean investors who believe the turnaround succeeds are being paid to wait with above market current income. Entry prices at $1.5 to $2.5 million are also the most accessible in the auto parts category. For yield-focused buyers who understand the credit risk, Advance Auto represents a value opportunity that doesn't exist with the AutoZone or O'Reilly deals trading at 5.25. Most Advance Auto leases are double net, NN, meaning the landlord retains responsibility for roof and structure. This is a meaningful difference from an absolute NNN deal where the tenant covers everything. Budget for periodic capital expenses on these properties rather than assuming zero out-of-pocket costs. Lease terms are 15 years with renewal options and 5% to 10% rent bumps every 5 years. Corporate guarantee from Advance Auto Parts Inc. I want to be clear about the risks here. First, BB is sub-investment grade credit. This is a materially higher risk profile than AutoZone BBB or CVS Health BBB. Advance Auto has closed underperforming stores, reported operational challenges, and is executing a turnaround that may or may not succeed. If you need investment grade certainty, this is not your tenant. Second, the NN lease structure, not absolute NNN, means you will have roof and structure expenses during ownership. Model that into your return analysis before you buy. Third, track store closure announcements carefully. If the specific location you're considering shows up on a closure list during your due diligence or ownership period, you need to be prepared for that scenario. Understand the releasing utility of the specific building and location. Advance Auto NNN is a category for investors who want wider cap rates and understand they're accepting more risk to get them. It's not right for everyone, but for the right buyer, it's a legitimate opportunity. I'm Ryan Solberg with MaxLife Commercial. If you want to evaluate Advance Auto NNN properties in Florida and work through the specific risk-reward on a deal, reach out. Visit maxlifedevelopment.com or call 321-1.